Ever wondered why there's so much buzz about Bitcoin ETFs? What if you could tap into the world of cryptocurrencies without the complexities of managing digital wallets or the fear of cyber theft? Today we're unraveling the mystery behind Bitcoin ETFs, a game changer in the investment world. So let's get started. Before diving deeper, hit that subscribe button and turn on notifications to stay updated. Don't forget to check out the links in the description for valuable resources. And now let's break down what ETFs are. Imagine a basket where instead of fruits you have stocks, bonds, or other assets. That's an ETF, an exchange-traded fund, a type of investment fund traded on stock exchanges, just like stocks. Easy to trade, they offer diversification and lower risk. But when it comes to a Bitcoin ETF, the story gets even more interesting. Unlike traditional ETFs, a Bitcoin ETF doesn't have a basket of different cryptocurrencies. Instead, it focuses solely on Bitcoin. This unique setup allows Bitcoin to be traded on US exchanges, similar to how you'd invest in stocks or bonds. It's a groundbreaking approach, opening the doors for investors to venture into the crypto world with the ease and familiarity of trading conventional securities. But what's the catch, you might ask? Well, let's move on to understand the problem statement of Bitcoin ETFs and how they're solving a major pain point for investors. Have you ever faced the dilemma of wanting to invest in Bitcoin but felt overwhelmed by the technicalities? You're not alone. This is where Bitcoin ETFs come as a savior. They address a significant pain point for many investors: accessibility and simplicity. The problem with direct Bitcoin investment lies in its complexity. It involves setting up digital wallets, understanding blockchain technology, and navigating through various security concerns like hacking or losing access to your wallet. This complexity can be daunting, especially for traditional investors who are accustomed to the straightforward nature of investing in stocks or bonds. Here's the twist. Bitcoin ETFs eliminate these hurdles. By investing in a Bitcoin ETF, you're essentially buying shares in a fund that owns Bitcoin. This means you can invest in Bitcoin through a brokerage account, just like any other stock, without the hassle of dealing with the actual cryptocurrency. Let's take a moment to zoom in on the current Bitcoin ETF landscape. As of now, the U.S. Securities and Exchange Commission has greenlit a remarkable shift in the crypto investment scene. On January 10th of 2024, 11 spot Bitcoin ETF applications were approved, stirring up quite the competition for investor funds. This is just the beginning, and by the time you are watching this video, more Bitcoin ETFs may have been listed on U.S. security exchanges. These 11 Bitcoin ETFs are not just any random picks. They come from a blend of well-known names in traditional finance and the crypto industry. This mix makes for an intriguing group, each vying for a slice of the investor pie. But what's really catching the eye of investors is the introductory incentives. Many issuers are waiving fees for a specific period to attract more investors up front. For example, the Bitwise Bitcoin ETF, BITB, and the ARK21 Shares Bitcoin ETF, ARKB, are offering a 0% fee for the first 6 months for up to $1 billion in assets, with an expense ratio of just 0.20% and 0.21% respectively. Then there's the FidelityWise Origin Bitcoin Fund, FBTC, waiving its 0.25% fee all the way through July 31st, 2024. Other ETFs, Valkyrie and iShares, aren't far behind with their own attractive fee waivers. What's fascinating here is the strategic positioning. Some, like the iShares Bitcoin Trust, IBIT, are going for a middle ground approach, offering a reduced fee of 0.12% for the first 12 months on assets up to $5 billion. This strategic pricing sets them apart in a crowded market. Now let's not overlook the veterans in this game. The Hashdex Bitcoin ETF and the Grayscale Bitcoin Trust, previously known for their futures ETF and closed-end trust formats, are transitioning to spot Bitcoin ETFs. This shift allows them to leverage their existing assets under management, justifying their relatively higher fees. For instance, Grayscale's fee stands at 1.5%, a premium compared to newcomers. This fee strategy among the new entrants is quite dynamic. Take the FidelityWise Origin Bitcoin Fund, which initially filed with a 0.39% management fee but revised it down to 0.25%, coupled with an extensive fee waiver. Similar strategic moves were seen with Valkyrie and ARK, significantly lowering their fees and offering enticing waivers for early investors. With so many options and competitive strategies, how do you decide which Bitcoin ETF is right for you? This is where understanding the broader context becomes essential. In a sea of Bitcoin ETFs, how do you pick the one that's right for you, especially when they all have the same underlying holding? Let's break down the key factors you should consider. Firstly, the expense ratio, or management expense ratio, or MER, is crucial. This is the percentage of your investment that goes towards managing the fund. Lower fees often lead to better performance over time. For instance, two similar gold ETFs might differ significantly in their expense ratios, which can impact your returns. In the case of Bitcoin ETFs, as we've seen, there's a range from as low as 0.20% to as high as 1.5%. Cheaper might not always mean better, but it's a critical factor. Next, consider liquidity. This encompasses two aspects: the liquidity of trading the ETF itself and the liquidity of its underlying assets. Look at the trading volume and the bid-ask spread. The smaller the spread, the better. High trading volumes typically indicate better liquidity, but remember, liquidity can vary, and ETFs with less trading activity might have higher bid-ask spreads. Tracking error is another vital aspect. This measures how closely the ETF follows the price of Bitcoin. Ideally, you want this to be minimal. An ETF with a high tracking error might deviate significantly from Bitcoin's actual price, affecting your investment's performance. Also, check the ETF's market price against its net asset value, NAV. If the ETF trades at a premium, you're paying more than the Bitcoin's worth. If it's at a discount, you're getting it for less. While premiums and discounts can self-correct, they are important indicators of the ETF's current valuation compared to its holdings. Now let's contrast ETFs with traditional mutual funds. Unlike mutual funds that price at the end of the day, ETFs trade like stocks throughout the day. This offers flexibility but also requires attention to intraday pricing. Your investment style should guide your choice too. If you're a buy and hold investor, trading commissions might not be a big deal. However, if you plan on trading frequently or using a dollar cost averaging approach, then consider the commission structure of your brokerage. Now that you're armed with this knowledge, are you ready to pick your Bitcoin ETF? Remember, each fund has its nuances, and what works best for you depends on your investment goals and risk tolerance. Let's get straight to the point about the challenges and risks of Bitcoin ETFs. It's essential to be aware of these factors to make an informed decision as an investor. Volatility stands out as a primary concern. Bitcoin is known for its rapid price fluctuations, which directly impact Bitcoin ETFs. This can be a roller coaster for investors, with the potential for both high gains and significant losses. Remember, while the chance of high returns is enticing, the risk of steep drops is equally real. Market risk is another critical factor. Bitcoin ETFs are subject to the same external influences that affect the price of Bitcoin itself. Regulatory changes, technological advancements, and shifts in market sentiment can all play a significant role in the performance of these ETFs. This means that external factors, often beyond the control of investors, can significantly impact your investment. Liquidity is also a concern. While Bitcoin as a cryptocurrency is highly liquid, the trading volume of a Bitcoin ETF and the ease with which you can buy or sell shares can vary. This can lead to periods where selling your ETF shares might not be as straightforward or as profitable as expected. Finally, regulatory risk cannot be ignored. The cryptocurrency market, including Bitcoin, is still in a relatively nascent stage and subject to evolving regulations. Changes in regulatory frameworks can have significant implications for Bitcoin ETFs. So, with these risks in mind, how do you decide if a Bitcoin ETF is right for your portfolio? It's not just about the potential gains, it's also about how well you can tolerate and manage these risks. As we wrap up our discussion on Bitcoin ETFs, it's clear that they represent a significant development in the world of investing, blending the innovative realm of cryptocurrency with the more familiar structure of traditional stock market investments. Bitcoin ETFs offer an accessible route for those looking to dip their toes into cryptocurrency without the complexities of direct Bitcoin ownership. They simplify the investment process, provide liquidity, and offer a degree of diversification. However, they also come with their own set of challenges, including market volatility, regulatory uncertainties, and potential discrepancies in tracking the actual price of Bitcoin. If you're considering investing in a Bitcoin ETF, remember to evaluate based on your investment goals, risk tolerance, and the specific characteristics of each ETF. Look at expense ratios, liquidity, tracking accuracy, and how these factors align with your investment strategy. If this video has helped clarify the ins and outs of Bitcoin ETFs for you, don't forget to hit that like button and subscribe for more insightful content. Check out the links in the description for additional resources and courses. And for exclusive tools and tips on personal finance and investing, head over to investingcouncil.com. Thank you for joining us in exploring the exciting yet intricate conversation about Bitcoin ETFs. Remember, every investment carries risk, and it's important to stay informed and make decisions that align with your financial objectives. Until next time, keep investing smartly and stay informed.